U.S. stocks tumbled on Wednesday after the Federal Reserve held interest rates steady while dashing hopes for an interest rate cut as soon as March. The Dow dipped 0.8%, the S&P 500 shed 1.6%, and the tech-heavy Nasdaq plunged 2.2%. All three main indexes were also weighed down by weakness in tech megacap stocks, a day after disappointing earnings results from Google parent Alphabet. The Fed's Open Market Committee, which concluded its two-day policy meeting Wednesday, left interest rates unchanged against a backdrop of gradually cooling inflation and a resilient economy. Anna Rathbun, Chief Investment Officer at CBIZ Investment Advisory Services, says the Fed's job was much clearer when inflation was hovering around 9% before coming down to roughly 3%.
As long as the labor market stays strong and people have jobs and income streams, it looks like they're willing to accept that 3%, and it works against the Fed. So that is why they have to be that independent. They're going to have to see some softening in the labor market for them to feel confident that not only will inflation get to their target of 2%, but will actually stay there.
Shares of Alphabet slid more than 7% the day after the tech giant reported disappointing ad sales and projected an increase in capital spending to boost its artificial intelligence capabilities. Microsoft also forecast rising costs to develop AI features, but its quarterly results beat analysts' expectations. Its shares closed down more than 2.5%. And shares of New York Community Bancorp tumbled more than 37.5%, touching their lowest level in over 2 decades after posting a surprise loss and slashing its dividend.